So before we start, it would be great just to get to know who's in the room. So if you could just give your name, your business, and one additional talent that you would make a difference to your life. So I'm just going to go in the order that I wrote you down as you arrived, or I've got you on my sheet. So we're going to start with Tony Cox.
Righty. I'm Tony, I'm from Louth, and I've got a co-working space in Louth, which is a flexible space for business meetings, for individuals to hot desk and live stream in my sound studio. It's membership only. Come and see me if you'd like a membership. The additional talent that would make a difference to my life. Well, actually, it's just started. My partner's just retired this week from her paid day job. She's very creative, a lot more techie than me. And she's developed her own website. So I'm hoping that her talent is going to add value to my business. Because I need all that. So that's me.
Brilliant. Thank you, Tony. Great to see you. Felicity, good morning.
Good morning. So I'm Felicity. I live in Marsh Chapel. I've just set out on a freelance business accounting career. That sounds very grand. And my additional talent would have to be time travel, because I have never got enough time.
Brilliant. David, stop sweating. I know we've got an accountant on the call, but we'll be okay. We'll be okay. Felicity, lovely to see you. Lovely to see you, and thanks for that. Time travel's a great one. Chris, good morning.
Oh yeah, I'm Chris. I run CDC TM Solutions. My job is basically creating safe working spaces on the roads. Additional talent. I'm pretty perfect as I am. I don't need one.
Brilliant. Thank you. Thank you, Chris. Good to see you. Cass, how are you? Oh, is Cass there?
Sorry, I didn't unmute. Idiot. Yeah, so I'm Kaz. I've got a graphic design company called Flying Lizard Design, and an illustration company called Charlotte Ann Studios. So I feel as if I need to divide myself in two. I'd love to be able to replicate myself. That would be excellent. And I'm finding it very difficult to kind of delegate to other people, really. So yeah, my additional talent that I would love to have is to have two of me. Be able to multiply myself.
There's a few films of that ilk, so maybe we'll think about that. Kaz, lovely to see you. Emma, are you all right to talk? I know you were hoping to stay on mute.
I can. I've got an annoying toddler at the side of me trying to steal my pen that I'm making notes with.
That's okay.
Yes, so I'm Emma. My business is Soapology. We make natural artisan soap bars. Sorry, I didn't give any thought to the question that you just said. What was the question?
Additional talent you'd make to make a difference to your life.
A talent that would make a difference to my life. Oh God, I don't know. I have no idea about that one. Sorry.
Okay, well,
ability to think on your feet.
Yeah.
yeah, that would be handy. Yeah, when I get put on the spot, I never know what to say.
Another pair of hands.
Yeah, from childcare.
Yeah. Brilliant. Well, lovely to see you, Emma. Thanks very much.
Yeah.
Lisa.
Yeah, I am listening.
No, absolutely. It's fine. Lisa.
Thank you.
Hi, I'm Lisa Pickles, and my business is Find Me the Leads. I work with food and drink producers, helping them get their products discovered and bought by more people. One additional talent would be patience, I think. Not very good at that, hence the reason why I had a Paddy when first starting on Wordle, but I'm getting better, so that's good.
Patience is a good one. Thanks, Lisa. Lorraine, good morning.
Morning, my name's Lorraine Smith. My business is Teach About.
and I support schools, academies, individuals at different stages of the teaching career. So from trainees to early career teachers to more experienced leaders, and SENCO, special educational needs, is my specialism. The additional talent, I was thinking about the splitting in two. If it's a fantastical one, I think not needing to sleep. So I could actually maximise the nighttime, and so I'd be awake and active, because evenings aren't great for me. I get tired. But if it's a realistic one, I think the ability to sort of really communicate my sort of message and experience effectively to other people.
Brilliant. 2 there. That's good. No sleep and communication.
Greedy, sorry.
No, that's good. That's good. Fantastic. Well, lovely to see you, Lorraine. Thank you very much. Liam, good morning.
Morning. I'm Liam from Trent Safety Services. We provide fire safety solutions, PAT testing, fire extinguishers, kitchen suppression systems, amongst other services. The one additional talent I would have, obviously I don't want to copy Charlotte and say split myself in two, so I'm going to say to slow time down.
Ooh. There's an interesting theme coming up here, but also brilliant, Liam. I like that. Thank you very much indeed.
Thank you.
Steve, good to see you.
Good morning. I'm Steve Taylor, ST Safety Services Limited, and I provide health and safety consultancy to businesses. I think the extra talent I would like is to be more talented with Excel.
Excel, excellent. Yeah, perfect. Now that's a talent that we could probably help you with, or somebody around the room I'm sure can. So brilliant, Steve. Well, lovely to see you. Thanks for joining us. Ali, good morning.
Hi. I'm not. Am I on mute?
No.
Okay. Honestly, I can never get used to Zoom. I'm Ali, and I work basically just as a freelance creative or designer or artist for hire, which isn't good. I need to find a bit more of a niche, but if I could choose a talent to have, then I probably like to have a better talent when it comes to dealing with my finances. So that's why I'm here.
Brilliant. Thank you very much. Good to see you, Ali. Last definitely not least, Joe, good morning.
Thank you. Sorry, again, I was late this morning. So I'm Jo, and I help organisations give their new managers the support that they most definitely need. And I do that through one-to-one coaching. Up until this morning, my existing talent was being immune to COVID, but then that went out the window. So my actual additional talent that I would like is to be able to run a marathon in under 4 hours, so I could enjoy the race and not have to do such hard work training. Because the running is fabulous, but the 3 months of training and getting up at 5 on a Sunday morning is hard work.
Yeah, unfortunately, as everybody on this call will know, hard work, without hard work, we don't get very far. So that would be an amazing talent to have, absolutely, in lots of ways. And I hope you're feeling okay if you've come down with the dreaded COVID. So good stuff. Well, lovely to see everybody. Hopefully there's some themes there around time, I think, which is quite unusual. And the caveats David's put there: we are not accountants, and this webinar is designed to explain the numbers in a straightforward language. So, you know, we're not accountants. We don't pretend to be, but because of our experience working in businesses and with businesses, we believe that the numbers and what we're going to share with you will help you and actually maybe save you some time moving forward in your business, so that you can focus on the important things from a financial perspective. So the first question that we have this morning is actually before the first question. So just to put this into context, so everything we do relates to 4 circles of business success. So we break down all our clients and businesses and everything we do into 4 areas, focusing on you, your business, your market, and your environment. And under those 4 headings are the key areas. So you can see there across the page. And this workshop and finance falls under the business section, and profit and cash flow. So everything we're going to be talking about today focuses on your business, finance, profit and cash flow. So it just gives you a bit of context. So the first question is, have you written your own job description? As a business owner, you will wear many hats, and they will cover things from managing director, operations manager, HR manager, head of marketing, sales director, IT consultant, chief troubleshooter, supplier management relations, customer research. Recognize all of those? Lots of nodding heads. And possibly the most important one is the finance director. And actually, I can guarantee, other than Felicity, nobody went into business to be an accountant or a finance director. And even Felicity's shaking her head, so that probably tells you something about being an accountant or a finance director. But being a finance director is very different from being an accountant. So a finance director needs to understand the money coming into the business, why, how, who, where, when, and the money going out of the business, why, how, who, where, when. Whereas an accountant creates a record of this. The accountant takes the information and reports it in a formal, structured way, which is where we get our accounts that get listed with HMRC, or on, if you're a limited company, on Companies House. So the finance director needs to understand the money and where it's going and where it's coming from. So why do you need to understand accounting and finance? Well, the most common reason that businesses fail is they run out of cash. Actually, it's not about not making profit. It's not having enough cash in the business to satisfy your creditors. And therefore, having management information helps with planning, means you can make good decisions, you can effectively allocate your resources, and actually you can see issues in the future. So you can plan potential issues, you can understand what you need to do to take action. So understanding your finances allows you to manage your business and keep your business running through all different circumstances. And we all know what the circumstances have been over the last few years. So having an understanding and a handle on that is really important. So we're now going to go into the first of our 5 key numbers, and David's going to take you into cash position.
Thank you very much. So obviously we haven't got ages to go through each of these. So by definition, it's a fairly high level look at each of these, just specifying the numbers and giving you some information around them. We will offer you at the end of this a free half-hour consultation with myself or Michael to dig a bit deeper if you want to in any of these particular areas. But the first of the 5 numbers that you need to have, that you need to know, is your cash position. And that's effectively the amount of cash that currently sits within the business. So you could sort of almost call it your bank balance, but it is slightly different to that. And you should have a picture of that now, and what it's likely to be in 30 days, 60 days, 90 days, what it's likely to be in 16 days. So starting point is, where is the cash? Do you have a separate business account? So, you know, if you're a sole trader, you may have a personal account that it goes into, and then how do you separate it out? If you've got business account, if you've got more than one business account, you may have a separate account for VAT. Do you have actual cash within the business? You know, if you're retail, if you're selling stuff for cash, if you go and do a trade show, then you've actually got physical money as well as electronic money. And also understanding which is the cash that belongs to you, effectively belongs to the business, and which already belongs to HMRC. Because if you're VAT registered, then if somebody pays you £2,400, then not all of that is your money. Some of it belongs to HMRC. So you need to keep an eye on that, or keep it in a separate account potentially when it comes in, so that you can do it. So how much of a handle have you got? So if we asked you, do you know last Friday's cash position in your business, how clearly would you know how much liquidity you've got, how much you've got available? How easy would it be for you to put your finger on that and say, this is how much we've got, this is how much is available? And obviously what happens then is you've got money going in and out. So the ideal cash position is that you've got enough to cover your liabilities, bills that you've got coming up in the next 30, 60, 90 days, and a bit of contingency as well for the unexpected. So not just at such a margin that you can only pay what you know already you need to pay, and if anything else comes in, you're going to be in a problem. So a bit of that, but not so much money sitting in your business that it's money that you don't need sitting there, that you could put somewhere else that could work for you in a different way. So there's sort of an ideal cash position where you've got enough to cover your liabilities with a contingency, but not so much that the money's not doing anything for you. So that 60, 30, 90-day view of the cash position requires you to understand what your liabilities and outgoings are over that period and what your income is going to be over that period. So you can look at the amount of cash and you can count it up today, but that may just change tomorrow, because you may get money in, you may get money going out tomorrow. In fact, you're going to have money going in and out at some point in the next 7 days, 14 days, 28 days. So having a forward view of that means that you're in control of your cash position, not just today. And there are basically 4 elements to cash flow that you need to be aware of. So cash flow is around the amount of cash that comes into the business and the speed at which it comes in, and the amount of cash going out of the business and the speed at which is going out. And if your cash position is tight, if your margins are tight, if you're working on sort of a fairly low balance, then you need to be in control of these and you need to be making these work in your favor, especially in 2022 when prices are going up so much, and we'll come back to that. Your outgoings are going to increase this year in various different ways. So what you can do to get more cash coming into the business, to improve your cash position, to improve your cash flow, is you can sell more stuff. And that might be selling more of your stuff to the same customers. It might be selling your stuff to more customers. It might be selling new products or services to new customers. So there are various different ways that you can do that, but selling more brings in more cash. Or you can sell the same amount and increase prices. And probably if you haven't increased prices recently, you should really think about increasing your prices this year, because your costs are definitely going to go up this year, and have already started to go up, I'm sure. So that's how you control the amount of cash that comes into the business. The speed at which it comes in is around systems, is around making sure that you've structured it properly and that you are on the ball in terms of the admin. A lot of business owners, especially if they don't like this money side, the finance side, they love doing what they do. They love making what they make. They love providing the service they provide. They hate the admin side, and they see an invoice out to somebody else as admin. And so it gets, oh, I'll leave that, I'll do it at the end of the week. And then at the end of the week, you're so tired that I'll do it on Monday morning. And then Monday morning, it's really hard to do it. Yeah. And invoices, wait and wait. Invoice is really key part of your cash flow. Get it out as soon as you're able to, as soon as you've agreed with the client, whether it's prior to or on delivery of service. Make sure you've got the right terms in there. Just because standard terms are 30 days doesn't mean you can't make that 14 days or 7 days or prior to. How can you structure it? How can you take deposits? How can you work on retainers? So you don't necessarily have to wait until after you've completed the work and then got round to doing the invoice before you send it out with the standard 30 days that sits on your invoice software. And so you're actually not getting paid until 2 or 3 months after you've done it. Can you structure it so that you're bringing in money before you do it? So controlling those levers of cash flow is important. The amount of cash going out, controlling your costs, reducing your costs is really important, especially this year, reviewing, looking at your costs. And then the speed of cash going out, don't pay invoices before they're due. If you've got invoice software, you should be able to set a payment date on it. So you don't have to pay it today. You can deal with it today, but you can pay it on the day that it's due. Now, I'm not saying you should pay people late, and there may be circumstances where you want to pay people earlier for different reasons, but as a standard, pay it on the day that it's due is the best way to deal with your cash flow. And make sure that you're managing those outgoings and that you know the amount of money that's going out to the business and why it's going out and where it's going out, and you're reviewing that on a regular basis. If you want to know a bit more about cash flow there, and I know some of you have downloaded this already, but on our website, the consulting room, the-consulting-room.co.uk, we've got a free download, a little bit more about the 4 levers of cash flow. So feel free to go and download that. So that's the first thing. Do you know your cash position now? Do you know what it's going to look like in 7 days, 14 days, 30 days, 60 days, 90 days? Because you're in control of that cash flow. And we'll look a little bit later on at the kind of cash flow projection that you can use to manage those numbers. But we'll move on to the second number, Michael, which is...
Thank you, David. So gross profit margin, because sales is vanity and profit is sanity. I'm sure you've heard that. If you don't know where your profit sits, you do risk being a busy fool. Picture of David yesterday afternoon. So the profit margin is very simple, very simple. It's the margin that you get of every pound that comes into the business that is actual profit. So quick example, I buy a widget for 50p, I sell it for £1, 50p of that is my profit. So 50% profit margin. Sounds really simple, doesn't it? But it's not that simple. Now, I might have mentioned this, we're not accountants, okay? So what we're about to talk to you through is not the accountant's way of doing a gross profit or profit margin. It's the way that actually delivers margin into your business, so you understand everything that goes into making a product. Hence the asterisk at the bottom of the slide there. And the profit is what allows you to take money out of the business and pay all your bills. So remember that. That's why profit is important. So let's start with the gross profit calculation. The cost of sale. So this is the cost of the products that you're selling. So the cost of the items, the raw materials that build into the product that you're selling. Now, the really important bit is that you include the time taken for delivery at an hourly rate, because what so many businesses do is they say it costs me so much to buy the raw materials, and then they calculate their cost of sales on that, and they don't take into account their time. Your time is precious. Your time has a value. So everything we're going to talk about in this section includes costs for your time. Now, the gross profit is the price charged minus that cost of sale. So whatever you're selling your goods for, take off the cost of sale, and that's your gross profit. And the percentage is the gross profit, see above, divided by the price charged, and then times by 100, and that will give you a percentage. So now you know how much of the pound is actually gross profit. So let's do an example. Let's look at something, and we all like cake. Everybody likes cake, so we're going to do some cupcakes. And we've got the cost of sales of ingredients. So these are the raw materials that will make cupcakes, flowers, eggs, sugar, chocolate, and the cupcake holders. And it costs £35 for those ingredients to make 50 cupcakes. Our wages. So this is where we start to build in some time and cost for our time of when we're actually making and decorating these cupcakes. Now, we know it takes an hour to prepare them and 70 minutes to decorate them. And I'm going to charge the business £9.10 an hour for my time. So that's my basic wage. So therefore, at 1 hour plus another hour and 10 minutes, that's £19.71. And again, I know that I'm baking them for 20 minutes. So that 20 minutes, I know, work out what my energy cost per hour is, because I've got my energy bill. So for 20 minutes, it's going to cost me £1.93. So I now have a cost of sale. So I now have a cost which works out at £56.64 for 50 cupcakes. So I'm going to break that down to £1.13. So I know how much a single cupcake costs to make. I'm charging £2.75 for these fabulous homemade cupcakes. And that means if I take off the £1.13, I'm making £1.62 gross profit. So £1.62 divided by £2.75 times by 100 equals 58.9%. So of every pound that comes in, 58.9% of my 58.9p is my profit. And don't forget, I've paid myself £19 in the process as well. So I have actually made some money towards my own bills, which is obviously good news because all my time is precious. So that's the basics of building your gross profit. And some of you will be sat in this room going, that's fantastic. But I sell service. I don't sell cupcakes or specific items. So how does that work? Well, the thing about selling a service is that there's a bit of a myth that people go, I do 2 hours consultancy and I charge £200. So that's 100% profit because I've made £200 for 2 hours. Doesn't cost me anything except my time. But time is very precious. So many of you mentioned time travel, slowing time down, split myself into two. So time does have a value because there's absolutely nothing free in business. Everything you do, you'll have an opportunity cost. Because if you're not charging yourself out, you're doing something to work on your business. And if you're working in your business and you're not charging yourself out, then that's something that you could have been charging yourself out at. So you're losing the opportunity to charge yourself out. So every day, every hour, every minute that you're not doing something which is chargeable, it's a lost opportunity. So you need to build a cost for everything you do in your business, because if you charge out yourself for 15 hours a week, I bet you work a lot harder than 15 hours a week and many more hours. So actually, you've got to think of all those hours, whether it's when you're doing your marketing or doing the finance or doing the receipts. What are you doing about your Facebook? What are you doing about talking to customers, selling where you're not actually charging? All of those things have a cost, and every time you're doing it, you're not making money. So that £100 for 2 hours, what actually goes into those 2 hours? Are you traveling to the business? Are you going there? How much time is that taking? My God, at the moment, it's costing quite a lot, isn't it, to fill your car up with fuel? So every time you're in that car, it's not just the time taken, it's also those fuel that's used. Maybe a parking ticket, one you pay for, not the yellow ones that get stuck on the windowsill, on the window. How much prep do you need to take? So how much time do you actually need to prepare for the meeting? And then how much time after the meeting? Don't tell me that as a service that you leave that meeting and don't have any other engagement with your clients. If you don't, you should, and I suspect you do. So that suddenly means you might be taking 4 or 5 hours for a 2-hour meeting. So suddenly your hourly rate isn't £100, it might be £40. And therefore, how much are you paying yourself? So are you actually making any profit? So the gross profit is really important. And whether you're a service or a product provider, knowing your gross profit, understanding the costs that build up into your business is really important. And remember the old 80-20 rule, that 80% is delivered by 20%. And the amount of times we talk about this with clients and you go, show me your top 20% of customers and whether their profit is 80%, the turnover is 80%. It happens time and time again. And with your products and services, you will find that a few will make the biggest impact on your profits. So understanding your profits allows you to focus on the few and drive those products that deliver the most margin for your business. Because let's be honest, higher margins will make your life easier. David.
Brilliant. So we've got cash position, knowing how much money you've got. We've got your profit, knowing where you make your profits, that you can take money out of the business. So now we're looking at, okay, what do you need to take out on a monthly basis? And 2 elements to this. One is what you're paying yourself, what you're taking out for your requirements, and also then what the business outgoings are as well. And it's important to know both of these. So the first thing is, what do you need to pay yourself every month? And that's around doing your own calculations in terms of mortgage or rent, electricity, gas, council tax, food, various other things, whether it's childcare, whether it's whatever. You have a set of outgoings within your household. What percentage of that are you responsible for? Do you want to be taking out of the business? So what do you need to pay yourself for it to actually be worth running a business? Because running a business, as you've all said, is really, really demanding on your time, on your energy, on your mental frustrations at times. So why are you doing this if you're not able to take enough money out of the business to pay yourself what you need to pay yourself? So that's the first figure that you should have in your mind, is what do I need to take out of the business on a monthly basis for it to be worth all this hassle? And that'll be different for each person, and just how important that is will be different for each person, and whether you want to take out the basics plus another 100%, another 50%, another 10% is a personal decision. But you should know that figure. You should know, actually, if I can't take this much out of the business on a monthly basis, I might as well just go and work in Tesco, because I'd be getting that much anyway. So really have a clear figure on what your monthly requirement to take out of the business is. And then the second element is, what does the business require you to pay every month? What are your business outgoings? And there are 2 elements to that. So we talk about variable costs or costs of sale, and fixed costs or overheads. So 2 different types of costs basically within the business. So variable costs are costs which go up and down depending on how much you sell or how much you deliver of your service. So going back to the cupcakes, if you sell 1,000 cupcakes, you're going to need more flour than if you sell 100 cupcakes. You're going to need more gas or electricity, whichever you use in the oven, if you bake 1,000 cupcakes than 100 cupcakes. So variable costs go up and down, and then there are fixed costs. So if you rent a building to do your work in, it doesn't matter how much work you do, actually you pay the same amount of rent. They don't say, well, if you're not busy this week, we'll reduce your rent. Your rent is a fixed cost. So there's certain costs in the business which are fixed and certain costs which are variable, and you should be in control of both of those. But we've talked about cost of sale, we've talked about those variable costs. So let's just make sure that we're in control of the overheads, the fixed costs. So that may include your marketing, accountant or bookkeeper, solicitor, stationery, utilities, all sorts of things like that. And these are costs that are going up this year. So if we look at March 2022, where we're sitting now, the rate of inflation's hit a 30-year high. Saw a news story this morning, food shopping is at a record level as well for a long time. Oops. Okay, thank you, Tony. Checking the chat for Tony, not fixed. Okay, so what's that made up of? What are the things we need to do? Michael's already mentioned fuel. That is the historic view of fuel prices. So we can see this year we've had such a spike in fuel. So even if it starts to go down and it goes down by 10p in the next month or two, and you sort of feel, oh, it's getting a bit cheaper, it's actually historically way, way above what it was last year. So fuel prices are high. Energy prices. Now, Friday, the price cap goes up. Now, I was watching a Martin Lewis video this morning. The average that price cap is going up for people, the average increase is 54%. That's the amount extra that your energy company can charge you from Friday. And that's made up of, for people on the standard tariff, an additional £70 of standing charge, electricity going up by 33% and gas going up by 75%. So if you're working from home and you're on a residential tariff, that's what your bills are likely to go up by. If you're paying business energy, there is no cap to it. So your bills are likely to go up by more than that. If your energy is included within your rent, it's your landlord that's going to find this problem, and your landlord's reaction to that is likely to be to put up your rent because they will have increased costs. So however it comes in, this year you're going to be paying more for your energy. And then in October, the price cap goes up again by another massive amount. So your energy costs are going to be a big element this year. So being in control of that. Employment costs are going up. So the national living wage and the minimum wage for people under 23 are all going up again from Friday. So that's adding extra costs into your business. It's adding extra costs into your suppliers' businesses. So what are they going to do with those extra costs? They're going to pass it on to the people they supply to. So even if you don't employ people, the increase in national living wage and minimum wage is going to push costs through to your business at some point. So actions we can take to combat these higher costs: make sure you track exactly what you spend, make sure you're in control of that, make sure you know what is going out on a monthly basis, what the annual costs, if you're just paying business insurance once a year or something like that, know when you're going to pay it, be really in control of what's going out of the business, and make sure you're getting best value. So things like, lots of things are going up, but things like car insurance may be coming down. So don't just renew your car insurance, have a look around and where you can save money. Review how you spend. If you're paying on a debit card all the time, can you get a credit card, a business credit card? And that may give you up to 59 days worth of credit if you pay it off every month. I'm not suggesting you build up debt on a credit card, but if you can actually structure your payments differently, that can help cash flow. Make sure you have a cash flow forecast, make sure you've got that view, and that will allow you to model any price increases that are given to you or that you pass on to the customer so you can see the effect. Know your profit per product or service, as Michael has always said, and then make sure you're comparing your suppliers to make sure you've got the best costs. So for example, for fuel, very easy, you can go to Allstar, you can just sign up for a free account and it'll tell you where the cheapest petrol is available within a 5-mile or 10-mile radius of the postcode that you put in. And if you're doing that, if you're saving, you see on the right hand side there's a 12p difference in diesel prices within 5 miles of where I live. Now if you're saving 12p a litre on a regular basis over a year, that makes a massive difference to the amount you're spending. And costs come straight off the bottom line. Costs add straight into profit. So really, really important to be in control of your costs. Okay, this is still me. So a couple of other phrases that you may come across. So the burn rate is the rate at which you're using up your capital. So you may have, if you look at your cash position, you've got a certain amount of money. Now for startups, they may have a chunk of money at the start and then not be making a profit initially. And the burn rate is the rate at which they're using up that capital. But it's a useful idea to have in your head. If you're not making a profit, is the burn rate. So how much are you depleting your resources by each month? And the financial runway, another term you may come across, and that's effectively the number of months, the amount of time you've got left until you run out of money. So as an example, if you've got £20,000 as your cash position at the moment, your monthly income is 1,000, your outgoings are 3,000, you're losing 2,000 a month. That gives you a burn rate of 2,000 a month, or 10% of your cash position, and a financial runway of 10 months. So just being aware, if you are depleting resources and you're not at a stage yet where you're making profit on a regular basis, then be aware of your burn rate and your financial runway to be in control of that. And the way to stay in control of these is to have a cash flow forecast. So this is an example cash flow forecast, and what we've got on here. Across the top, income coming in, the sales and the receipts, which feed across from the sales tab at the bottom there. And then we put all our monthly costs in. So one thing you can do with that is on the right-hand side, you can see the annual cost, which is really useful. Something that costs you £46.80 a month doesn't sound too bad, but that's actually costing you £561.60 a year, which sounds a bit more of a chunk out of your income. So chunking things up to what you're paying on an annual basis can give you a different view of it as well. So plug in your costs, plug in your sales, and then you're able to work out your profit and loss for each month. And if you start with an opening cash balance, you can see how your cash balance changes over time. So just a simple spreadsheet like this can help you to really have that view of cash position, of profit and loss, and those kind of elements on a monthly basis. This particular one, you can download if you're a member of the Consulting Room Club from our members area. So that's where that particular one comes from. You see their cash flow and projection templates. So if you want to know more about the Consulting Room Club, speak to myself or Michael, but have something that controls the cash, that you know your monthly requirement, what do you need to take out of the business, and what does the business need to spend. Be absolutely on top of that. So that's the third number. Fourth number, Michael. This is the fun one.
Yeah. So your break-even turnover. So the point of which you go from selling to making money. So this point of which all your costs are covered and you're starting to make real profit. Now, cash flow will help with this. Knowing your gross profit will know with this. But David's got a great slide for me next. Here comes the science bit. Felicity's laughing at this thought already. She can see where we're going. So calculating your break-even turnover. So break-even revenue, so the fixed costs divided by the contribution margin ratio, or the contribution margin ratio, contribution margin divided by the total revenue, or the contribution margin equals the difference between the revenue and the variable cost. I hope you're keeping up with me at this point. So let's break it down into something a little simpler. We've talked about your gross profit. So your small business sells 10,000 units at £10,000, so that's £100,000 revenue. We know our cost per unit, our variable cost is £3.50. So our variable costs are £35,000. So our margin, our gross profit, as we talked about earlier, or contribution margin in this example, is £65,000. So we've got £65,000 left in our business after we've sold our 10,000 units. Hooray! But then you've got to pay all your overheads and stuff. So how do we work out how much we need to sell to make profit? So you take that £65,000 and divide it by the 100,000 by the units. So that equates to £6.50, the 10,000 units, sorry. So you've now got £6.50 per unit is profit. So therefore your contribution margin ration or percentage is 0.65, 65%, but 0.65 is the figure you will need. And it's quite, I mean, if we go into a live example, and I actually did this for a client when I saw this from David, because I thought, well, let's make sure this works. And I did this on a client who's got annual costs of,
Oh, no,
Where have you gone? There we go.
You're going to use something different.
No. So, but if you use this as the example, fixed cost £25,000. So that is covering your rent, your rates, your accountant's fee, your insurance. So £25,000 a year. You take that number, you divide it by that 0.65, and it gives you the number that you need to break even. So within all that science, within all that complexity, it's that simple. So then you know that you need £38,461 pounds of income in total to break even. And therefore you can start to break down how many units per week you need to sell. You can start to understand how your business can be scaled. But understanding at what point you get through that profit line through the year and where you start to make profit is really important. So understanding your break-even point, that point in the year, the number of sales, gives you the ability to drive your business and focus on the important stuff. And breathe. I'm David, and I'm going for a lie down.
Okay, so that's,
and Felicity, the good news is Felicity isn't shouting or making too much noise, so there must be something in there. And a thumbs up from the accountant. Hooray!
Okay, so then the once you've got all that information, once you know what's happening now, once you know what's going out each month, once you know your cash flow, once you know what you need to do to break even, then what we're looking at is where we want to be in the future. So Tony says, in this volatile environment, do formerly fixed costs now become variable? So it's an interesting question. That there is, I think we would want to put more things into variable costs than accountants tend to do. Accountants tend to find it easier to lump quite a lot of stuff into overheads, into fixed costs, just it's easier.
Also, David, it's also why you have a target and a forecast, because then you can start to track it and have different reviews that check those things.
Yeah. So yeah, that's why it's important to distinguish as well, because if you put it into fixed and you think it's not going to change in the year, then that's yeah. Anyway, let's move on. So it's important to have a target and a forecast for the year, and then break that down into a month, so you can then monitor your performance versus target on a regular basis. So if we said to you now, it's you've got 2 days left in this quarter, how is your performance in quarter 1 2022 compared to your target, compared to your forecast, compared to where you expected to be? Could you tell us, could you say, well, we expected to have this much revenue with this much profit by the end of Q1, and we are now at this point, so we are 10% above, 10% below, we don't really have a clue, because we don't monitor those kind of things. So Liam says, if your product or service is varied rather than product, for example, we sell fire extinguisher units, but the profit structure is different for a PAT test. Yeah, so that's why you do it. You need to the calculation that. Do you want to take that, Michael, or shall I? The calculation. That's why you do it per line, or we didn't include it in this, but you can do previous number by gross profit. So you can just take an overall figure and do it, but it's not. It's useful to do it online. But obviously, if you're doing various different ones, then you need to amalgamate them. Michael, does that make sense? What I just said?
Yeah, and it's this bit of understanding each different products and service you sell, and what the income is, and how you calculate the profit on each one. Because the PAT test is a service, but you need time. So how long does one take? If you're traveling to them, how long is it taking to drive to them? What's the fuel costs, etc. So each one has a different profit line, and we start to then focus on which is the ones that are the most profitable for the business. So is it selling fire extinguishers, or is it actually servicing the PAT tests? And therefore, when we're selling the units, do we focus on making sure we get the service contract as well, as an example?
Yeah, so the danger with lumping it in as a gross figure, the contribution margin, is that you don't see those differences. So you can work out a break-even turnover, but it doesn't tell you where you should be focusing your energy, which is why it's useful to do it per line, if that makes sense. And then you would allocate some of the fixed costs to each line. We can get into that in the half-hour free discussion if you want to take that up without getting too far, because contribution margin ratios and those sorts of things are a bit, if you've never come across them before, they're a bit obscure. But once you get your head around it, you do see the value of those. You do see it's a reasonably straightforward calculation. Okay, so having KPIs, key performance indicators, and key, it's got to be an important thing to measure. Performance, it's got to be something that somebody in the business can affect, and indicator, it's got to be something you can measure. So that's a key performance indicator. And revenue, profit are definitely things that fall into that category, but something you should be measuring on a regular basis, so you know, how am I driving now? What am I looking like? Forecast for the next 3 months, the next 6 months. What do I need to do in the whole year? You should be in control of that. Your cash flow forecast will really help you with that, because you can put a target into that and measure yourself against that as well. But looking longer than that, if you want to grow the business, if your vision is that in 36 months or 60 months time, you'll double the size or whatever that growth happens to be, then that's going to need investment. So that's going to affect the cash flow. That's going to affect the cash requirement that you need, because you know, take the example of making something. If you're making something and you want to be making 3 times as much in 3 years, then you're probably not going to do it with the same facilities, the same equipment. And for most businesses, you have to make that investment in facilities and equipment before you get the revenue in for selling the new things that you're making. So having that 36, 60-month view of where you want to take the business and how that affects revenue and all those numbers that we've talked about so far is important, because, again, going right back to that first slide, the main reason that businesses fail is because they run out of cash. And the main reason that successful businesses run out of cash is because they have to start spending before they get the money in. And that comes back to structuring your cash flow, getting deposits in, making sure the money's coming in, controlling expenses going out, having a forward view, all the things that we've been doing. Make sure you don't reach that position where suddenly you're selling loads of stuff, you're really busy, you don't get any sleep, but there's no money in the bank because you haven't actually said, well, if we grow, we're going to need more money to grow. So looking at that 36, 60 months, what investment do you need to make in facilities, equipment, stock, or other people in the business in order to protect yourself, in order not to reach that crisis point? And if you go to 5 years' time and then work backwards from there and make a plan backwards, that's quite a good way of working out what you're going to need when. So, for example, if you want to, currently you don't employ anybody, but in 5 years' time you want to employ 10 people, that's an average of 2 a year. So are you going to take on 2 people this year? And if so, when are you going to do it, and how are you going to plan for that? Because it's never the right time to take somebody on until it's too late, until you hit crisis, until you go, oh, I'm so busy, I need just take somebody. And then you take the wrong person at the wrong time for the wrong reason. So having that 5-year view of where you want the business to go and what that looks like in cash terms helps you to plan for those kind of big decisions, investments in facility, equipment, and people in particular. So those are the 5 numbers that you should know. You should know your cash position. How much money have you got now? How's that going to change over the next 30, 60, 90 days? What profit do you make on each product or service that you supply? What's your margin? What's the differences? Where should you focus your energy? What's the monthly requirement? How much do you need to take out of the business, and how much does the business need to spend to carry on trading? What's your break-even turnover, especially in the early days? What sales level do you have to reach before you're not losing money? And looking ahead, how are you performing this quarter, this year? Where do you want to be in 3 years? Where do you want to be in 5 years? If you know all those numbers, if you're in control of those numbers, then you won't get very many surprises, and you'll be running a successful business. Michael, any final words? We've got a few minutes.
No, I think hopefully that's not been too fast-paced, and you've all got some thoughts, and it's been a worthwhile hour of your morning to focus on your business, to get your heads up out of the day-to-day and, you know, above the clouds, and think something differently. Have we got any questions? We've probably got a couple of minutes for any questions, so if anybody has any. Stunned silence.
It's really useful, really useful. I love the 4 rings that you do, the 4 circles. I think it's a really good model. It is really useful like this. I wish my finances were more complex than they are, and I had more incoming and outgoings, and I don't. So a lot of what you've delivered here for me is a bit up here at the moment, but the stuff about the break-even point for me is really quite important. and trying to look forward to see that at some point I might actually break even. It's quite an optimistic look at the moment, but it's a good thing to look at. So thank you.
No, thank you, Tony. No, any other comments, questions? Okay, I mean, what basically what we'll do is we'll share with you, I'll send an email round. We've got our next workshop is on the 5th of May, and that's focused on selling, but stop selling and start influencing. So the Small Business Owner's Guide to Winning More Business. As David has mentioned, through our website, we've got a link that you can book a free 30-minute one-to-one session with one of us. So click on that link. I'll forward that out to everybody on an email, so you'll have that. And just to let you know some other things that we do, if you're not aware, we run a consulting room lunch, which is every Wednesday, 12:30 to 1, a guaranteed 40 minutes, focus on working on your business, a discussion with a group of peers, and a great little networking session. So that's every Wednesday. It's a drop-in centre, all via Zoom, so you don't need to leave the office or your home. The website David touched on is the consulting room. We've got a Facebook group, which I think everybody is members of. So, and we also have a YouTube channel. So again, if there's a YouTube, there's videos. David had put this, for example, on our YouTube channel, plus our business updates and weekly information. So if you want to spend a bit more time, if you want to understand a bit more of what we do, we'd be delighted to have those 30 minutes, especially for the questions that you've got out of today. So that's our contact details. If you have enjoyed today, if it's piqued you and you've thought, actually, this is something that has really got my mind going, we'd be delighted if you share on social media. Obviously, all noise is good noise. If it has been good, my name's Michael Hardy. If you've not enjoyed it, his name's David O'Brien. Have a great rest of the day, and we'll see you all soon. Take care.
Thank you.
Thank
you.
you.
Really enjoyed it. Thank you. Thank you so much.
Thank you.
Can't find my leave button. It keeps popping up and popping down.